Welcome to the Airflow Podcast. I'm your host, Rickey Thomas, and this is the place where Kingdom Heirs go to be informed and inspired. So sit back, relax, and flow with me. Welcome to another episode of the Airflow Podcast. I'm your host, Rickey Thomas, and today I have a special guest. He is a man of many talents, many hats he wears. He's an investor, trader of stocks, family man, and some other things that we'll get into a little bit later. But his name is Joel Rodney Harrison. Joel, I am so excited to have you on, and I appreciate you joining.
Oh, I appreciate being here. I always love to share the knowledge. And,
yes,
explain to people what I'm doing and how I've gotten to where I am. So
yes,
I'm welcome. Well, I'm happy to be here.
Thank you, sir. Thank you. So I want to start off just, talking about your family structure. I know that you're married and have children. Is that correct?
Most def. I've been married for 17 years.
17 years.
Okay. Yeah. And I got two adolescents. So I'm almost, I almost got them in college.
Okay.
So,
almost empty nester.
most def. So, we had to create a balance within our family to be able to do all the things that we do. And I try to share my life experiences because, a lot of the times, people are educate, but it would only be on the education side. So I try to put a little piece of what I'm doing in reality so that people can know that an average Joe, because I call myself an average Joe, but you can invest in this market, and my job is to try to make it not so scary.
Yes. And that's what pulled me into it a little quicker because I've been talking about doing it forever. We always talk about I'm gonna put some money in the market, and you don't really know what to do. And then, this whole thing with Robinhood kicked off, and people just started throwing money into things, which it's not a bad idea, but you got to know how to get into it, what to get into, or you're just going to lose, your lunch money every week, doing that. So
true. And just a little bit about myself. I started out in real estate. So that was my corporate America type job that I had. I was a real estate agent, but I was heavily invested in the real estate market. I had over 10 houses. I was showing people how to flip homes. And in 2008 and 2009, the real estate market crashed.
Right.
And that was the first time in my life I realized that making money, I was providing a service for people, and that's how I was that's how I was getting paid. But I never really knew how to generate income, taking money and making money with that money. And it was the first time in my life that I felt useless, and I don't, a lot of people lose their jobs, and I had been winning my whole life.
Right.
So it was really humbling to not be able to go out and get a job. So I had to learn the hard way, and the stock market was the easiest way for me to learn a skill set. And I try to teach people that skill set now, because if I had that skill set back in the day, I was like, man, I would have been trading when I was in college. I would have been trading when I was in real estate, and I would have been doing it ever since I was young. So my job is to try to give everybody the fundamentals and the basic things that they need and what to look for so that they won't make the same mistakes that so many of us have made. I love corporate America. I'm not telling people to quit and not do a 9-to-5 job. But what we've been doing is we get comfortable with that job. And then when that job gets taken away from you, you're like, oh my God, how do I earn income? And some people will start out with a restaurant business or start out with that business. But why are we not learning the basic building blocks of business, which is the stock market, right? All the businesses that we get involved with in every day, the McDonald's and the Walmarts and the Targets, we should have learned at an early age how those businesses work and operate, capitalize on that. So as we become adults and we start having money that we want to put into the market, we know how to go about doing it and not waiting until we're 30, 40, or 50 to learn that skill set. So that's pretty much what I've been doing.
And I noticed too that, and you, like you said, you kind of demonstrate a lot of that, the way you live and the things you do with your own family. So you put it out there, like, you have your sons and even your wife, and you're teaching them about the market, and you're showing them how to invest and do that at an early age, which is great. And you also provide a service for that. Teaching families, teaching kids. I think you've done stuff in churches and, different groups and things like that. So, getting that kind of experience early is important, but for you, you learned it through going kind of through a crisis. But how did you get that knowledge for yourself to start investing? What did you do?
All right. So I'm gonna be honest with you. When I was in real estate in Atlanta, I was selling real estate in some high-end areas. So a lot of my clients had wealth. So as a real estate agent, I was always able to see the financial records of all of my clients. And I realized real early that the wealthy operate totally different from the rich or the people that have, stable jobs.
Right.
So when the market started to turn, I started to, a lot of my wealthy friends were telling me the rotation of money. And they were like, oh, this is normal. And I'm like, this is normal. This is a crisis. And they're like, no, money rotates out of the market. It goes into these other different areas, and it just rotates into, different fields. It usually starts with the stock market, then the stock market, people make money there, and then they put that money into real estate and into paintings and all these other things that we were taught not to invest in. I had friends that were flipping like Ferraris and Lamborghinis. And when we were growing up, we were told, it's hood rich if you buy those type, if you buy the Rolexes, if you buy the big gold chains, that's hood rich. But my wealthy friends were doing it. And they were like, nah, it's not hood rich. It's you got to know how to go about doing it. And I don't want to really go into that aspect of it. But when the real estate market started to crash, they were talking about shorting the market. And I was like, what the heck is shorting? And they were like, yo, you can make money on the market going down. Money is like energy. It's neither created nor destroyed. It's just transferred from one entity to another. So when people are losing money, somebody else is making money. So if you know what side to be on, then there's never a time that you can't make money. And the stock market is the only market that you can make money on when things are good and when things are bad. And that's when the light bulb went off, and they were buying gold. They were buying, and then as soon as the real estate market crash started, you started seeing a we buy gold business on every corner.
Yes.
And I was like, man, when I was growing up, when Run DMC put those gold chains on, everybody said, don't do that. Put your money over here. And they're telling me, no, your money is supposed to be in precious metals. It's supposed to be in, all of these different items that we're not supposed to invest in, but there's a way to do it. Exotic cars, paintings, the stock market, real estate, and money just rotates. So I learned from my wealthy friends, and I tell people that all the time. In my room, I always say, stop listening to the thousandaires and start listening to the millionaires. And a lot of people get offended when I say that, but there's a lot of truth to that, because a lot of us get educated, right? Yes. And we got a lot of degrees, and I love the fact that most of my friends are lawyers and doctors and engineers and all of these different things. And and we can be anything that we want to be, but just because you have a degree in something doesn't mean that you're an expert in it. And I love listening to other people that have actually made money show me how it's supposed to be done. And I take all of that knowledge that I've learned from real estate, because I love real estate, and from that wealth, and then I try to teach the fundamental basics of money, which so many of us just don't understand.
Very true. Very true. And again, that transparency, I think, is what's key. And some people can't handle that. Like you say, in the room, in the room on Facebook, a lot of people, I see a lot of comments where people are like, Joe is out there flexing on the gram, or, flexing about this or that, talking about vacations, or talking about the cars, or just talking and showing receipts of money that you've gained, showing your investment account. I know you got the millionaire challenge that you got out there, and you crossed over that 500,000 mark. People are like,
exactly.
People are like, well, I've seen people like, well, why is he putting that out there? Is he trying to show us this and that? And, and most people is positive, but you always get those haters out there, but you're doing that to say, hey, if you follow these steps, I'm telling you guys the same things that I've learned. I'm giving you the same knowledge. I'm not hiding anything specifically just for me. I'm giving you guys the playbook. You just got to follow it. And I notice a lot of people just want to follow, like you said, the thousandaires. And you've got tons of quotables that you put out there. I mean, you could probably start a line of t-shirts of just your quotables in general. But, it's just interesting because, people look at, in our community, I'll say in the Black community, we've always looked at investing or stock investing as, something that was sort of taboo. You didn't really do it. You may do a 401k type thing, which is something you should do. But, stocks are always a risk. It's a risk to do a stock, but they'll go and do those scratch offs all the time. And, that's a bigger risk than anything, But how in your consultations that you've done, what are some of the hardest things that you've had to try to break people from, some of those hard traditions that you've had to break off for some of your people that are coming to you?
Well, first things first, I always tell people that investing is easy. That's the easy part, right? The making money in the market is the easiest thing that you can possibly do. So you got to start understanding that investing is not even an option anymore. It's essential. And, I'm a numbers guy. My brain really only sees things in numbers. Even when I did the SAT back in the day, my math score was like double my verbal score because that's just how my brain works. Mm-hmm. And, we're brought up thinking, 1 + 1 is equal to 2. And I say, but you weren't ever taught inflation. You weren't taught that in the future, what you think the cost of something is going to, what you think the cost of something is right now is not going to be that value in the future. I was, my sons were looking at pickup trucks. Like one of my younger sons loved pickup trucks, right? Mm-hmm. And, he's looking at F-150s, he's looking at Raptors, he's looking at all these different things. And when you go on Auto Trader now, you're going to notice that some of these pickup trucks, these modest looking vehicles that you see people driving around are $120,000, right? For a brand new pickup truck. And I remember a pickup truck was like $7,000, $8,000, $9,000. And now it's 120. Back in the day, that's how much a Bentley or Rolls Royce would cost. Right. Now, why is that happening? No, it's not because of the technology of the vehicle. It's because the things that you're buying right now, the value of that dollar is decreasing, right? So you have to start thinking you got to be thinking way bigger than you're actually thinking. If you're making a modest $30,000, $40,000, $50,000 a year, there's nothing wrong with that. But what you should be doing is trying to invest 10% of what you're making so that in 10 or 15 years, what you invest can be worth 10 times the amount, right, so that you can have a higher buying power. And that's the part that none of us are able to see unless you've been in the game and you've seen how much things have gone up in price. There's nothing to be a millionaire anymore. There's so many millionaires that you've never heard of. There's so many billionaires that you've never heard of. Right. Back in the day, you can name every billionaire on your hand within our lifetime. Right. So it's not an option anymore. It's essential. So the later that you learn, you're just getting left behind. So my job is to try to get people involved early. I don't teach one big thing that a lot of people do when they come into the market also is they want to make that fast money. Right. I tell people to do it all. All right. If you were an athlete, they're going to always tell you, you can't just come into the NBA and have a 3-point shot. You got to be able to play some defense. You got to be able to dribble. You got to have some people skills. Right. Like there's a lot of things that you have to do. You got to be educated to make it to the NBA. You just can't be an athlete, right? Yes. And I tell people the same thing about the stock market. You can't just come in saying, I want to make quick money. Now, I want you to make quick money, but you need to learn the long game. You need to learn the mid game. You need to learn the short-term game. You need to learn everything about it. And the only way that you're going to learn about it is by doing it. Right. The biggest myth in the world, the biggest mistake that a lot of people also make is they think that they make money depending on how much education they have studying companies. Like, oh my God, I got to put in all of this studying so that I can make it big by hitting this one company. And I'm like, nah. Like the Amazons, the Apples, the Googles, the same companies that you use every single day can make you rich, right? You just got to learn how to take 10% of whatever you make and start reinvesting it in yourself. And once you start seeing those 100% returns or those 1,000% returns, not only will you start doing it daily, but every time you get hold of any money, you're going to learn how to pay yourself first. And, that's one of the key things that I try to teach my clients, within our first 2 consultations, how to position yourself in the market so that you can win all the time.
And I think that's important because a lot of people that I've talked to, even recently, they want to just take a lump sum of money, put it in and just let it sit there and let it ride,
Exactly.
And you have a term that you kind of coined. I know you said you were trying to actually see if you can get it trademarked, but stock mortgage.
Exactly.
And I want to talk about a little bit about that because you bought your first Tesla kind of going through that process. Can you kind of explain that a little bit?
Okay, so a regular mortgage, we go out, we go to the bank, we get a loan, for the house that we want. Most of us can't really afford, well, not afford, but most of us aren't liquid enough to have $300,000, $400,000, $500,000 to buy a particular house. So we usually go to the bank. They may give us a 3, 4, or 7% interest rate. We end up borrowing the money from the bank, and we make those payments every single month. But after 30 years, you find out that $300,000 loan, you end up paying like over $1 million for, right? And a lot of people don't know that. So a stock mortgage is set up the same way, but instead of going to the bank, you are the bank. All right. And, it's a dollar cost averaging, and everybody can go and Google this right now. What's DC? We call it DCA, or dollar cost averaging. Dollar cost averaging is when you buy a stock over and over again over a certain amount of time, and you try to average in your price. So you might buy some at $50, you might buy some at $40, but your average price will be right around $45. Well, the stock mortgage is a mortgage that you create for yourself. And what I did was, I was real a lot of people say I'm flashy and this, that, and the other. And it's kind of funny to me because I'm like, yo, you haven't seen what I've gone through in the last 10 years. I was driving an Acura MDX that was paid off, right? And we had a BMW, but it was a 3 Series, nothing really flashy about it. And that's what we drove, for the last 10 years. But what I told myself 10 years ago was I'm not going to go and get a loan for a car anymore. What I'm going to do is I want to be the bank. So what I did was, I took $30,000, but I broke up that $30,000 over a 5-year period. And one of my favorite cars is a Tesla, and I wanted a Tesla S. So the average payment for if you took $30,000, you divide it by 60 payments, because most of us have a 5-year loan, that's going to be right around $500 a month. And that's with a 0% interest rate.
Right.
So, instead of going to the bank and getting a loan for $30,000 and buying a car that I thought was going to be average, I said to myself, I want to buy the car of my dreams. I've been buying cars my whole life. I'm in my 40s. It's time for me to live a little bit. I have a lot of things under my belt. I've been pretty responsible. I owe that to myself. So instead of paying the bank $500, I said, you know what? I'm going to start buying Tesla stock. So I bought $500 worth of Tesla stock, and I did that every single month. $500, the same car payment the same payment that I would use in a for a car payment, I paid myself. I just bought on the first of the month $500 worth of Tesla. And after those 5 years, instead of it being worth $30,000 or you paying the bank $100 and something thousand, my equity ended up being over $100,000. And then a $30,000 investment is now worth 4 or 5 times that amount. And now I can go out and I can buy any car that I want to. Right. And of course, when I went and bought that car, I got a lot of flack for being flashy. And I'm like, guys, it's a Tesla, it's a Tesla for my wife. And that's how I went about doing it. But it's called a stock mortgage. It's a mortgage that you create for yourself in a company that has high growth potential. And I teach people how to find companies that grow in value, because a lot of us think that stock price is where we make our money. And it's it's the one thing that's killing a lot of us when we first get into investing.
And I'm
Because
glad you mentioned that. I'm
Mhm.
glad you mentioned that, because that was my thing. I'm like, oh, this stock is only $2. I need to buy a bunch of that and hope it goes up to $10, and we'll be rich. And that mentality was out there until I started, listening to the group and listening to you. So go ahead. I just wanted to say something about that, because that was
Yeah.
me.
But yeah, so so many people, they come into the market and they think that numbers are like they look at it like it's real estate, right? They think,
Right.
oh, because Tesla was a $700 stock, that means Ford can go to $700.
Right.
And that's not how the stock market works. Like, these companies have a certain size, right? And you make your money on the growth or the size of that company growing in value. And if their stock price is going to reflect it, but you got to know what their market cap is. And this is the stuff that I teach people all the time. Like,
right.
just in general, like, we look for companies that are $1 billion. So I know that if it can go to $10 billion, that's 10 times, I can make 10 times my money. But if a company is already too big, it can't grow 10 or 15 or 20 times its value, no matter what the stock price is. And
right.
it's the number one challenge that I have teaching these grown adults how to do it. Now, the kids that I teach, they all learn this day one when they're in 5th and 6th grade. Mm-hmm. But it's my adults that are making the biggest mistakes. Yeah. So, it's my job to try to teach them market capitalization and know what to look for so that they don't get caught up in stock price anymore, because advanced traders don't care about stock price. We care about the growth of the company. And with brokerages out there that will allow you to buy partial stocks or fractional shares, you can invest in any company you want to. You don't have to worry about Amazon being $3,000 a share. If you want to invest $30 in Amazon, you have the ability to do it. And if Amazon grows 3 times its value, your $30 is going to grow 3 times its value. So it really opened the game up where any and everybody can invest in anything that they want to, and share price means absolutely nothing these days. Yeah. So, it's my job to try to break that habit.
And that's good, because, I know people that look at Amazon and like, oh, I want to own, Amazon, but, I can't buy $3,000 worth of it. And like you said, there are platforms like Robinhood and others that you can go and buy fractional shares, but they'll look at it like, if I'm going to spend $3,000, I'll go buy $3,000 of Carnival Cruise Line. And Carnival Cruise Line, as we know, is not doing so hot right now. Exactly. But they're like, I can buy a buttload of shares, and I can I can have all this, and in one day it will grow and be big. But if they would have put 3,000, if they had 3,000 to invest and they couldn't buy a full share of Amazon, but they got most of a share, that will grow over time, because Amazon can have gains daily. A small percent gain for them is huge, compared to what you would get for those smaller companies. And it takes a longer amount of time to get to that point. So that was something I learned, from you off the top, was look at market cap, look at companies that are $1 billion or higher. I think some of them you call meme stocks, where they're smaller companies that have potential growth. And I know you've endorsed a few of them to potentially look at, that have an opportunity. They're close to that range, but they haven't crossed the $1 billion yet. But that is really breaking cycles that a lot of people had. And like I said, myself included, I look at the share price versus looking at the company, what its growth potential is. Everybody wants to hit that lottery stock, or like the AMCs or
right.
The GameStops and things like that, or in the crypto world, everybody wants a Dogecoin pop, and that is not, that's not a regular occurrence. So
and I mean, you can find companies like that. You just got to understand how big they are. Like when I tell people, you want to buy Apple, I say, all right, so you want to buy Apple. So how big do you think Apple's going to grow in the next 10 years? And everybody will say, I don't know. Aren't they making a whole bunch of iPhones? And I say, well, how do you know how big Apple is? Right. And they're like, no, the share price is 150. Can it go to 1,000? And I'm like, Apple's a $2 trillion company. It took 30 years for it to get to $2 trillion. So you make your money from the growth of that company. So if Apple goes from 2 trillion to 4 trillion, no matter how much you invest, it's going to double in value. And then the light bulb goes off for everybody. And they're like, shoot, so I should be buying small companies that can grow in value. And I'm like, yeah, doesn't mean that you can't buy Apple.
Right.
Apple is still growing at about 10 to 20% a year. But if you're trying to make 100% return or double your money or triple your money in 1 year, Apple might not be that route for you to go. And they're thinking that because Apple makes so much money, they're going to get a piece of what Apple is making. And I'm like, that's not how stocks work.
Yeah, it's not a one-to-one type thing. That they have also pay money to make all those products. So
exactly,
their profit margins are a little different than what's going to show up on the stocks. So
exactly.
But that financial literacy, I think, is key, and that's important. And just that little bit right there will probably save a lot of people some frustration. But you also have the emotional part of it. And you always talk about, you can't be emotional when you're investing. So I know you've mentioned some times where you've pulled the trigger on certain deals that you didn't mean to because emotions got the best of you. So talk a little bit about that. How does the emotion piece play into investing and trading for you?
All right. So first things first, let's break down trading versus investing, because a lot of people don't even know the difference, right?
Yes.
Investing is when you buy something and you hold it for 12 months minimum. So I don't care how much money I got people that tell me this all the time. Joel, I got $150,000. I just put it in Moderna, and I put it in Moderna as an investment. And, I want to see what it can do in 3 months. And I tell people, well, that's a trade. That's not an investment.
Right. And
they're like, it's an investment because I put 150K in it. And I'm like, they're thinking it's a short-term investment. No, it's a short-term trade.
Yeah.
And I always tell people, if you're going to buy something, and I call it flipping stock, just like flipping real estate, think about it. I can buy the house that I live in, that I'm not going to be emotional. Well, I'm emotional over it when I buy it. But most people, when they buy their house that they live in, they probably overpay it. Why? Because they know they're going to be in it for 20 or 30 years. They may have bought it in a district where it has a good school system, and they're going to ride it out no matter what happens.
Right.
But when you're flipping a house, you don't think that way. When you're flipping a house, everything has to line up very quickly because I got to buy that house. I got to renovate that house. I got to sell that house. So there's going to be a lot of emotion involved because there's a time frame involved. When you're investing in things, you're investing in companies like Apple and Amazon for the long run. So that means that no matter what happens, the CEO can die. You can still make money in the next 10 to 20 years because you're going to be able to withstand any of those ups and downs. You're going to be able to withstand COVID. You're going to be able to withstand the real estate market crisis, right? So there shouldn't be emotion into companies that you hold for longer than a year. But if you're going to flip stock and you're emotional about the stock, then you need to understand the technicals. So if you can't read a stock chart, if you can't tell me the support levels, the resistance levels, the 200-day moving average, the Fibonacci retracements on that particular company, there's no reason or why you should be buying something trying to make money on it within the next, 3, 4, 5, or even 12 months. You can do it, but just understand that you're trading, and traders use technical tools. Investors don't necessarily need technical tools. They're buying fundamentally good companies that are going to grow over the next 5 to 10 years.
Right.
So hopefully a lot of your listeners can understand. That's the first thing that I tell people within the first 5 minutes of the consultation. Are you trading or investing? I'm buying Apple, Joel, and I want to make, are you trading or investing?
and it is a difference, because I know a lot of people, again, get into the market because they want to be investors. And like you said, they want to, as soon as they see the stock price drop of a company, they're like, sell it all. Let's sell it now. It's going down, without even having, without even knowing a good entry point, knowing when you truly want to get out, and that is, it's tough because nobody wants to see money. They think money's going out the door. Nobody wants to lose any money, but there are times when that happens. And really, if you're investing, one of the things that I learned was that's the time you go buy more, when the stock price drops. If you believe in this company, you want to go long-term into it, you buy it on the dip,
And it's crazy because I don't understand why the stock market is the only market on earth where if somebody buys it at a high price and it drops in price, nobody wants to buy more.
Right.
And I'm like, in any other investing vehicle that you use in real estate, if I buy a house for 200 grand and I see the house across the street go for 150, I'm running out there trying to buy it.
Right.
If you go to the car dealership and you're trying to buy a car for 30,000, and then all of a sudden you go on Auto Trader and you see it for 24K, you're going to run and buy it for 24K. In the stock market, if you buy Apple at 200 and it drops to 100, everybody thinks, oh my God, Apple's going to zero.
Right.
And I'm like, no, it's on sale.
Yeah.
You should be buying more. You should be dollar cost averaging and creating a stock mortgage, because chances are in the next 5 to 10 years, that stock is going to be significantly higher. So we got to learn how to buy things when they're on sale, which is buying the dip, like you mentioned.
And that just goes back to doing the research on the company. You know, if this is a company that, you know, is historically done well, it's always going to have dips. I mean, I've looked at charts and, you know, year over year, and you can almost see around the same time certain dips take place. You know, around the same time every year, there's always a sell-off, and then it comes back up again, and it's a cyclical thing, you know. And doing that helps me to take the emotion out of it, because it's like, okay, I bought, like I've had Apple stock for a little bit now, because I think I invested back in January, and I have like probably 40 shares of Apple stock now.
Cool. Congratulations.
Appreciate it. But it took me a while to get to that, get the nerve to do it, because I'm like, all right, I don't know if I want to do this. And as soon as I bought it, the stock dropped. The prices dropped on it. And I was like, oh, here we go. So I was like, and I almost didn't go and buy more. I did, you know, because I started off originally with 5 shares, you know, 5 shares in a couple of different accounts, and I upped it once I saw the price go down. I'm glad I did, because now it's back above, you know, it's starting to go back up. You know, I'm seeing, you know, it's definitely above where I bought it at, and I'm profiting in it now. And I see it continuously doing that. But I almost pulled the plug and said, sell it all, get rid of it, and do it. Because of that fear and that emotion that comes into trading. But I know it's a company that is going to make me more than my money just sitting in the bank account and, you know, not gaining any interest at all, you know. So that's one of the things that I think people need to understand. And that's why it's important to have people like you who can walk them through this process, and you do it in a way, and I love it, because you're very blunt about it. You know, not mean spirited, but you're just like, hey, think about it. Think of what you're saying. You know, you're taking all this money, you're throwing it, and you're like, don't throw it all in this one stock because everybody's talking about this one stock. You know, why do you want to do that? It may not be a bad investment, but you get people to think. And sometimes that challenges folks, because, you know, like, well, I'm paying you to tell me what stock to buy. You're like, well, no, I'm not going to tell you what stock to buy. I'm going to give you the mindset around how you should go about picking the stock that you want to invest in, or if you're going to trade. But I'm not going to tell you, okay, take this amount of money, go to this stock. Take this amount of money, go to that stock.
Right. And you know, when I first came out, man, I get so much flack for everything. Right. So, you know, just even calling my business W.W.J.D, which is what would Joel do, I got so much flack for that. And I'm like, why do I get flack for being myself? Right. Like, I'm Joel. Like, what am I supposed to say? What would Jim do? Like, what would Joel do? So the whole reasoning behind what would Joel do is I actually want you to ask yourself, why? What would Joel do in this situation, right? If I'm buying this and I know that it's 12 months before I sell it, how would Joel go about this particular stock? And it's not so that I could be glorified. It's because I've been in the business for a long time, and I have a real good foundation as far as the fundamentals. And it's what a lot of us are missing. I've seen so many advanced traders that just don't have the fundamentals in place, and they're out there teaching it. And I'm like, guys, if you don't know what a support and resistance level is, it's almost like learning how to build a house without learning how to build a foundation. Right. You're just building the house up and you don't know what it's built on. And, you know, my job is to always make you question, like, why am I buying this? How big is this company? How far can it grow? What's the time frame that I want to be in it? How much money do I want to put in? How much can it realistically grow? And you should be able to answer those questions within 1 minute of analyzing a stock. And I have this program called Mission Impossible that I teach kids.
Mm-hmm.
And I have kids, man, that can look at a company and within 1 minute tell you everything about it. And it blows a lot of adults' minds because they thought that investing in this stock market thing was a hard thing. And it's not. It's just that we weren't taught what to look for.
Right.
How big is it? And most of us can't read charts.
Yeah.
Like, how are you investing 6 and 7 figures in a company, and you literally can go on Google and say, what's Apple's 5-year performance? And I know so many people that have dropped $1 million in Apple and never even went to Google to see what the performance was over the last 5 years. Right. And then they get mad at me when I say, oh, you're gambling. And they're like, how dare you come at me that way, Joel? And I'm like, you're gambling.
Right.
Look at the 5-year performance. If you see that Apple grew 100% in 5 years, then realistically, how much can you make in the next 5 years? 100%. That simple breakdown of Apple, 99% of my clients that come to me can't even do that. So, I try my best to make sure that we ask the correct questions before we get into something. And I always tell people, look, you can invest in anything.
Mm-hmm.
You can invest in anything. I'm one of few people that not only teach the fundamentals, but I'm investing in every single thing that everybody says don't invest in. Don't invest in crypto. You're going to lose all your money. Well, I made a killing in it. Don't invest in cannabis stocks. I make a killing in it.
Right.
Don't invest in Tesla. Don't invest in this. Don't invest in that. There's a way to do it. But if you don't know how to do it, then of course it's going to be gambling. So my job is to teach you how to make that fast money, how to make that slow money, how to invest, how to trade.
And it's important. And I think if people come to you as a blank canvas and throw away all the knowledge that they may have gotten, erroneously from other people, and just, because there's a lot of bad information out there. I've seen just Googling on the internet, and I'm like, and I have those what would Joel do moments. I'm like, dude, that is wrong, and I'm still a noob at it, but I know some of the stuff that people go out and say, go and throw, if you've got money, throw all of it into this one stock and just let it sit there. Now, crypto, you might be able to do a little bit like that because it's a little more volatile. So yes, it's going to drive you crazy watching it. I think a lot of people start freaking out, with the whole Bitcoin when it dropped down, it was getting close to 20,000 and Ethereum dropping down low. But, what did it do? It came back up. And now they're talking about it's going to hit, another
100K.
Yeah.
By the end of the year.
Yeah. Which, I don't put anything past it, but, obviously, those are things that, like you said, people told you don't invest in this, don't invest in that. And you didn't take their word for it. You did your research. You don't just throw companies in there. Cause I think you have like 50 companies now that you're invested in.
Yep.
You didn't just take your money and just, willy nilly throw it out there in it, but you also show people these are the stocks that I'm invested in, and you don't hide that information, you share it, and the question then becomes, okay, these are the stocks that he has, but it doesn't mean go out there and buy those stocks right now. You need to find out what are the entry points, what are the things that you have to do to get into that stock as a good point. Now, like I said, if you're investing it, that's entry points might not be as important. It's important, but not as important. Because you're going to be buying it over time, consistently, or you should be buying it over time consistently. So it's just those kinds of things that to me are so important, but a lot of people don't get. So this is what Joe offers, guys. This is the consultation services that he has. He has one-on-ones. He has a lot of different classes. I've taken them all. We talked about stocks and we talked about, some of the fundamental things. There's options, which a lot of people don't know about. They may hear about them. Robinhood has it available on the platform. I know people that have wasted a lot of money clicking on options buys on Robinhood without really knowing what options are. Now, for beginners, do you normally teach them about options?
Oh yeah, most def. Now I don't teach anyone under 18 how to trade because I don't think it's important for them to know how to trade. Trading, I believe, in my opinion, is for anyone over 18. Once you get, once you're out of high school and you're on, you don't have to go to college, but after 18, that's when I think you should start learning that particular skill set. But options, in my opinion, is the ultimate trading tool that's out there, because you're controlling 100 shares. So what does that mean? That means if I look at Airbnb and I see that it's $150, I can control $15,000 worth of Airbnb and not even have $15,000, right? Mm-hmm. I can have $150 and I can benefit on all the upside, and I can decrease, my leverage to the downside. I know it sounds complicated, me explaining it right now, but most people that are trading, they're going to be trading in the options world, or they're going to be trading in the futures world if they don't have the capital, the $25,000 that's needed to day trade stock.
Right.
And it's a very exciting place to be, because I see so many people buying penny stocks, and I'm like, why are you guys buying penny stocks looking for a 50 or 100% return in a day, when you can go and buy Apple or AMD options and make 50% or 100% a day? You can make the same type of money you're looking for in these penny stocks using the same amount of money.
Right.
And you can generate better gains with reputable companies. So I try to educate people on what the real traders like real traders are not trading penny stocks. Yeah. So anybody that's trading penny stocks out there, I hope that I didn't offend you, but the real traders aren't trading that. They're in the options market. But that is one of the education. And I do webinar week every month. So if you're part of the Insider Trading Room, every single solitary month, the first week of the month, I teach a 3-day webinar that's over 10 hours, and it's live. And I tell people, you're going to learn something in this particular webinar. I hate going to webinars where you do the webinar, and then at the end of the webinar, you got to pay $10,000, $20,000, $30,000 to get to that extra elite level. No, you're going to learn everything in them 3 days. And in those 3 days, I teach the basics of stocks. I teach the basics of options. And then I also teach the basics of day trading, so that you can get those 3 skill sets that you can use for the rest of your life. And it's been very, very successful over the last year, providing, those 3 days for people that are coming into the market. And you could be brand new, not know anything about investing. I got a bunch of high school students that might come in and they want to learn it, even though I don't really like teaching them the trading side, but some parents will have them also involved in those webinars. And my job is to try to keep it as simple as possible. I try to teach so that a 5th grader could understand what we're doing, but you don't have to feel like, oh, I'm in the same class as a 5th grader.
Right.
Because we're still talking about how to build equity or how to trade and invest in the stock market game.
Yeah. And I talked to my wife about that, because, I was like, I think we need to do a family, a family investing class that you do. But I want, because my 5th grade son, he's listened to the videos with me. So, I've been in the classes, and then of course we get the download of the videos, and I go back and constantly rewatch it, because I'm breaking a lot of habits from investing, and even in trading, I've bought some options, I've had some success, and I've had some failures in it. And I always go back to say, okay, what did I learn from that failure? And then I go back to the video and say, okay, now what would Joe do in this situation?
Right.
But I think it's important to get them to learn that skill early, not necessarily. I mean, and I get what you're saying about the whole trading piece, but just to know that there's a way that you can make money, in a quick time. Because one of the things I was impressed by, you only trade for about an hour a day?
Yep. 60 minutes. That's it.
So 60-minute trading, where a lot of people sit there through the whole day trading thing. So, some people will say, well, how do you make money in that short amount of time? How do you focus on all the different stock options that are out there and all the things that you do? So how is 60 minutes enough from your perspective?
Well, because contrary to a lot of people's belief, the market really only runs twice a day. It runs in the morning, and then it runs really hard at the end of the day. And every now and then you'll see the market move in the middle of the day, depending on what type of news comes out. So if you ever wanted to, anybody that's new, if you ever want to see the most exciting part of the stock market, turn on your TV and see what happens right around 9:30. You're going to see the market really, really start. Orders come in. Everybody's excited. Everybody's been studying all night, and we get into the stock market. I don't really start trading until about 9:45, 10 o'clock. And then I'm usually out of the market by about 11 o'clock because the market's going to either run up or it's going to run down within that first 2 or 3 hours of the day. And then lunchtime happens.
Mm-hmm.
And because you have, because the stock market is based off of the East Coast, usually you'll have, because it's the East Coast, the West Coast cats, I don't really meet too many people from the West Coast that are day traders, because you would have to be up at like 6:30 in the morning. So they really like trading towards the end of the day because it's like afternoon, right around 2 o'clock is like 11 o'clock California time. So you'll see the market start to run again for about 2 to 4 o'clock. But I like to trade the market when it's really, really moving because it's easier to predict the movements. Because once it fundamentally starts going in one direction, it's like a freight train and it can't really reverse, right? So I usually use 1 hour. I used to trade 9:30 to 4 o'clock every single day. And that's the reason why I got glasses right now, because I ruined my eyes looking at a computer screen for 8 hours. And I said, you know what? I don't know any job where you have to just be constantly looking at a screen for 8 hours. We're humans, right? And as humans, we only really have the ability to really, really focus and be intense for about an hour a day. So I try to teach to trade in those hour sessions and then take a break, and then come back maybe at 2 or 4 o'clock, trade another hour. You can trade 2 or 3 hours, but kind of break it up because you're going to burn yourself out if you try to trade 8 hours of that particular day.
Right. So another option that you have is you do a little bit with crypto.
Okay.
So with the cryptocurrency, a lot of people, again, they think it's a hoax, even though there's been millionaires made overnight, literally made overnight with crypto.
Yes.
How big is your crypto consultations been lately, just with everything that's been happening with, especially around Bitcoin and Ethereum and all these other coins where, now you're starting to see all these altcoins pop up and people are getting antsy about things.
Exactly. So right around when crypto started to really, really start moving, when Bitcoin started to move, I think right at the beginning of 2000, like right around mid 2020 up until now, my consultations were huge because the crypto market started to move. And as people started getting educated about the market, they started to say to themselves, hold up, this is a real asset class.
Right.
And then when you start understanding that in order for a stock or a crypto to even have value, $1 had to be converted, or some type of monetary system had to be converted in order for it to have value. So the whole crypto space, a lot of people don't know this, there's $2 trillion circulating in the whole crypto. So if you took every single cryptocurrency out there for the dollar amount that was invested in it, there's over $2 trillion invested in the crypto space. And at one point, there was almost, I think, 3 trillion when Bitcoin was sitting at its all-time highs. So the market capitalization, what we were talking about earlier, kind of gives you an idea of where these particular cryptocurrencies can go. So, when people were buying Dogecoin, I understood why they were buying Dogecoin and I forgot the other one that everybody was buying. But what I want you guys to start doing is look and seeing how much is invested in that coin. Like Bitcoin, for example, I think is $700 or $800 billion.
Yeah.
So, if it's $1 trillion and you think it can go to 2 trillion, then you can make 2 times your money. And I think a lot of people are using the same mindset that, hey, I'm going to go buy these cryptocurrencies that got small numbers and maybe it can grow to $40,000 a coin. And I'm like, it's almost impossible for that to happen, because in order for that coin to grow to $40,000, it will literally mean all the money in the universe. Yeah. And a lot of people don't understand that. Dogecoin, I think, is like a $40 billion coin. When it was 1 billion, I said, guys, there's a lot of room for it to grow. Why? Because Bitcoin was worth 150. I think Ethereum was worth 50. Yeah. So if those coins were worth a certain amount of money, it gave you it was the comp, right? It had a value that something else can grow to. And $1 billion to 40 billion is 40 times your money. But some of these numbers that I see are just obscene and just not realistic for those things to go to. So there's nothing wrong with investing in anything. Just know the value of it and what it can grow to. And I teach that a lot in my webinars.
Yeah. And I think it just goes back to people look at volume. Like I know there's was it Shiba is one of the
that was it, the Shiba coin.
Yeah.
right.
And you know, you can go
out like, I got 1 million coins. I'm like, okay, can that value grow to can Shiba go to $1 a coin so that you can become a millionaire? Right.
Yeah, and people just had that mindset that I know. They said, you know what? I can afford to go out there and I can spend, you know, I'll put 1,000 on Shiba. 1,000 in Shiba will probably get you like 130 million coins or something like that.
Right.
You know, so yeah, if the decimal moves over one place, okay, you might have a little something if it goes over, but it's going to take, if it does any of that, it's going to take forever for it to happen. So, but you can take that 1,000 and put it somewhere else and see your value jump up a lot quicker. And who knows if Shiba will take off? You know, there's got to be, you know, some value behind it, you know, some fundamental value, you know, to have it. And that's just like Dogecoin. You know, at least you had Elon Musk going out there and tweeting it, and then it was going crazy where everybody was like, oh yeah, we're gonna buy Dogecoin because he's gonna be on Saturday Night Live and he's gonna talk about Dogecoin.
Exactly.
And they never really saw that. You know, it had a little small pop here and there, but if you got in it in the beginning when it was less than a dollar or less than a penny, I should say, then you know, you made some money off of it. But you know, a lot of people don't think like that. You know, how many people could have been billionaires if they would have bought Bitcoin at the beginning when it was $1 or less? You know, now it reached highs of 60,000. So all of those things, you know, it's just go ahead.
And that's what scares people. Like when the average beginner investor looks at the market, they look at Bitcoin and they see $30,000. And then in their mind, they're like, $30,000 is a lot. That's how much a Honda Accord is. And I tell people that's not what you look at. That is an illusion. That $30,000 could easily be $3. And they're like, what? But 3,000 and, you know, $3 and 30,000 is different. And I'm like, no, it's not, because it's what Bitcoin can grow to.
Right.
Bitcoin can be $1 million a coin right now, but if it's $1 billion in market cap and it can go to $100 billion in market cap, that means it can go from $1 million to, you know, $100 million a coin.
Right.
And people don't understand that part of it because they're so focused on that big number. They're so focused on 3,000 for Amazon or 2,000 for Google that they don't think that they can make any more money because that four figure number is so big to them. And I'm like, guys, that's not where you make your money. I've seen people buy penny stocks. I've seen people buy companies that were $1 or $2 a share, and they were bigger than companies that had $300 a share prices. So you guys got to get educated so that you know what to look for.
Right. That's important. So I know you got a big challenge that you've been working on for your Cybertruck, and based off your crypto investment. And
right.
I've been watching you because I'm like, now the cryptos pop back up. You're like, all right, now I can really get all the bells and whistles on it. So did you handle the Cybertruck investment, or I guess it didn't start off as Cybertruck, it was just your crypto investment, and then you saw the Cybertruck? And did you do stock mortgaging for that, or was it just
I sure did. So I put in my order for the Cybertruck, I think in 2018, I believe, when it came out. So the thinking behind that was the same way that I looked at the Tesla, right? I don't want to spend, you know, $100,000 on a Tesla if I can put, you know, $30,000 into it. So I had the same mindset behind my crypto, right? If they're telling me that Bitcoin could be $100,000 by the end of the year, and I could put a $5,000 investment in it and it'd be worth $100,000. Yeah, I'm going to take the $100,000 and buy a truck with it, but I really only spent $5,000.
Right.
And I try to make people challenge themselves on, you know, items that they might want in the future. It doesn't have to be ignorant like me with a Cybertruck, right? It could be an investment for college. It can be a down payment on a house. And I know a lot of people that do that. And, you know, they'll take an investment. They might take a $10,000 investment. And my thing is 10X. I always look for companies that can 10X. What do I mean by 10X? I look for companies that can grow 10 times their value. the only way that you can know if a company can grow 10 times its value is not by looking at its share price. It's by looking at its market cap. So when I find companies, for example, let's say, I'm looking for a company that can grow 10x in it, and I love the payment space. I always give this example. And I go and I find Visa, and I see that Visa is a $300 billion company. And then I go out and I look for a company that's similar to it. And this is exactly what I did. And I went out and I found something like a Square or a PayPal that was similar to Visa. Well, at the time, Visa was like a $200 or a $300 billion company. So that means if I want a 10x, I got to find something that's 20 or $30 billion that can grow 10 times its value. Right. And I got to see that it's growing in value. I got to look at its last year, see if it's doubled or tripled, see if it's still growing in value. So, I took that same steps in crypto. We looked at Bitcoin, we looked at Ethereum, and the number that we're looking at for Bitcoin is 14 trillion. I know that sounds like a lot of money for you, but it's really not that much if you get all the institutions and you get the world invested in the crypto space. So, when Bitcoin was $100 billion, and I know a lot of people are probably writing down these numbers, when it was $100 billion to 10x was $1 trillion, right? So we knew that Bitcoin can go to $1 trillion, not because it had a catalyst behind it, but it was because there were other asset classes that were already $1 trillion. Apple's $1 trillion. Google's $1 trillion, Microsoft's $1 trillion,
right. So
Amazon's $1 trillion.
There's a blueprint there.
Yeah. So can it grow to $1 trillion too? Well, we have other things that's done it, so it can probably do it. And sure enough, Bitcoin, when it was a $5,000 coin, it was $100 billion. When it was $50,000 a coin, it was $1 trillion company. So the fact that it had room to grow made me realize, hey, maybe if I put 5,000 in Bitcoin, as an investment, and I did the Cybertruck challenge. I said, guys, if Bitcoin ever gets to $1 trillion in market cap, it's gonna pay for my truck. And I always advise people to kind of play that game with themselves to get them invested in the market. So I call that the Cybertruck challenge. So every day, everybody's looking to see how much Bitcoin is, to see what type of truck I can buy once it comes out. Is it going to be a Cybertruck or is it going to be a Tonka truck?
Yeah, the Tonka truck. And I know at one point it started dipping. You was like, well, if I have to downsize and get that Tonka truck now.
Most def.
All right. Well, one last question I want to throw out there, because I see a lot of people getting in this, especially a lot of young people. But what are your thoughts on Forex trading?
So Forex is just like anything else, right? Forex is just like stock investing. It's just like options. But Forex, in my opinion, is more on the trading side. Now, Forex has its own language, at least in the stock market. Like when you turn on your TV, if you turn on Bloomberg or CNBC, most of the things that you're going to see, 90% of the education or the stuff or the charts that you see are going to either be stocks. You're going to hear them talking a little bit about options, and you're going to always hear them talking about the futures market. You rarely hear even the big time mutual funds talking about foreign exchange currency. Foreign exchange currency is pretty advanced. So if you're going to do it, you have to learn how to trade. You got to learn how to read charts because you're working with a lot of leverage. And I know a lot of our youth are jumping into it because they can take $100 and turn it into $10,000.
Right.
But if they don't have the correct fundamental basis behind what they're doing, they're going to struggle in Forex just like they struggle in anything else. So again, that's why I teach what's called price action. And when you learn price action, it doesn't matter what asset class you go to. I have Forex traders that come to me and learn the what would Joe do method. I have futures traders come, crypto traders come to me, and they trade whatever asset classes they're in, but now they're learning, these different patterns in the market, these flag patterns in the market, their entry points, their exit points. And I don't even have to be there with them. I can just look at a chart and I don't even have to know what they're trading because everything is going to look the same way on every chart. So once you learn the fundamental basis of trading on a chart, there really isn't anything that you can trade. But foreign exchange currency is a little bit advanced. So I always tell people to make sure they understand that when they get into it. You can make a whole bunch of money, but you can lose a lot either. In my opinion, I think you should start out maybe in the stock market, maybe in the futures market, maybe in the crypto market before you start venturing into the foreign exchange currency market.
Okay. Well, Joe, I definitely appreciate your time. One of the things that I wanted to put out there is to make sure people know how to get in contact with you if they're interested in your services. Okay. So if you could share that, also any social media accounts that you are connected with your services, that would be great if you want to share that.
Yeah, so you can, everyone can reach me on my app. It's called the What Would Joe Do app, W.W.J.D. You can find that on, if you have an iOS or an Android device, you can go into the store and you can find my app. Now, the app is free. Now, there is a membership service there for your traders. All right, so for you traders out there that need an alert service where I send out options alerts or I send out stock alerts for hot stocks, then you probably want to take part in that. As far as social media, I spend a lot of time on Facebook. So I am, I've gotten better. I'm older, but I've gotten a little bit better at being on Instagram. So you can probably find if you're on Instagram, you can find me at Joel the Ninja Trader. Go ahead and follow me, and you can watch my stories. And I try to show people what I'm buying there, and the same stories that you'll see on Instagram, you're going to see on Facebook. So even if you're on Facebook, you're not going to miss out on a lot of my posts. And if you're on Facebook, you definitely want to join the Inside of Trading Room. It's a free room that's available to everyone where you're going to rub elbows with a lot of different powerful people out there, as well as other traders or investors that are in the market. And I love that particular room because that room's been open for over 10 years. And it's almost like an almanac. You can come into that room. You can literally type Joel Apple 2007, and every single post that I ever talked about or mentioned Apple will pop up for you. So a lot of people love that room because it's receipts there. You can even go to the receipts tab and see if I've been talking about the company and if I've made money on that particular company. You can also book consultations through the What Would Joe Do app, but a lot of people go through the What Would Joe Do Facebook page, and you can also go there and you can book consultations there if you want to do a one-on-one with me. My consultations are 30 minutes long. You can ask me anything about the market. I have people that have the craziest questions, and because I'm an active trader and I'm an active investor, 99% of the time I can answer whatever question you have or try to direct you or guide you in the way that you need to go in. Or, a lot of people come to me and ask me realistically if certain strategies can work. So I'm a strategy specialist too. Well, I'll talk about your strategy. Okay. So those are all the different places that you can find me at. But if you really want to get in contact with me, the What Would Joe Do page is the fastest way through Messenger to contact me personally.
Okay. And do you still use the PayHip site?
Yes, I do have the www.payhip/What Would Joe Do. That's where you're going to be able to find my videos. But the easiest way to find my videos is going to be through the app. Okay. And when you go through the iOS or the Android device, you're going to get access to the videos that I have available. But if you can't find me, you can always just Google What Would Joe Do, and you can also find me there, and it will direct you in any way that you need to go.
Okay, guys. So there you have it. I'm going to also share this information in the notes for this podcast, so you'll have that. I would 100%. I endorse Joel. He does a wonderful job in getting people right and understanding the stock market. You just have to do your part and follow the instructions. I mean, it's that simple. If you follow the instructions, you pay attention, take notes, take the emotion out of it, you can make money. And Joel is proof of it. And if you join that Insider Trading Room, he shows receipts along with a lot of people. They're showing receipts on a daily basis. And it's not to flex. It is to say, you guys can do this too. And they're sharing the companies that they've invested in. So I definitely suggest that 100%. Joel, I appreciate your time today, sir. I thank you for this information. I'm going to be continuing to follow you, and I'm sure the listeners are going to be following to see what happens with the Cybertruck Challenge. Are you going to leave that and go to the Hummer? Is that the next wave to go to say?
I am looking at that Hummer EV, but Bitcoin's going to have to run a little bit for me to be able to afford that.
Okay. Well, hey, we're going to be looking out for you, praying for that, brother. But I definitely appreciate your time. Thank you again. And we will be looking forward to possibly having you back on here once you get the truck, so we can talk about the next big thing that's going to be the challenge to go with.
Well, good luck, Ricky. I appreciate you having me out today. This is my passion, as you can hear in my voice. I'm an active trader. It's rare to kind of see a teacher that's out there that's also in the trenches with you. And this is my way of giving back, man. So I appreciate you asking me to come on. Anytime you want me to come on, man, I'll be here.
I want to thank Joel Rodney Harrison for joining us again on this episode of the Airflow Podcast. I appreciate the information he shared, and hopefully everybody was able to glean something from that when it comes to stocks and trading, and just understanding that it doesn't take a lot of money to do it. It just takes the right kind of knowledge and knowing when to get in and when to get out. So it's very basic, but Joel is very good, and please be sure to follow him. He shared with all of us. He shared with us the social media tags for him. So please check him out. Join him in the inside of trading room that I'm a part of, and really just continue to look at how you can build wealth through diversifying your portfolio. And this is something that as kingdom citizens, this is where we need to be. We need to be telling a full story of what we're doing. That we have spiritual, physical, financial balance, and we have to be able to move in that thing, on a daily basis, because there's so much that God has waiting for us. So again, as Kingdom Heirs, you were created to flow. So flow on.